This video is sponsored by Refinitiv, a London Stock Exchange Group business, powering financial markets around the world.
European investment banks are losing ground to their American cousins, even on their home turf. But that's not necessarily a bad thing. Investment bankers earned a record $20 billion worth of fees from arranging deals and share offerings in Europe, the Middle East and Africa last year, according to Refinitiv. But a growing proportion went to the 5 big American banks. Those 5 US giants, which includes JPMorgan and Goldman Sachs, earned about 31% of the fees in Europe last year. Meanwhile, the 6 biggest European investment banks, which includes BNP Paribas, Barclays, Deutsche Bank, Credit Suisse, earned a collective 12%. As recently as 2010, the Europeans and Americans were roughly on a level pegging in the region. Now, this trend is partly because the big Americans have very vast, profitable home businesses, allowing them to support huge operations abroad in places like Europe. It follows that the Europeans should probably focus on their own niche products rather than trying to go toe-to-toe with the Americans across the board. For UBS and Credit Suisse, for example, that probably means focusing on deals where the company is owned by a very wealthy controlling shareholder, because that person is probably also a private banking client. Meanwhile, Deutsche Bank should probably focus on lending into its home market rather than advising on deals and IPOs abroad. There's little chance of European banks clawing their way back up the league tables, but investors will thank them for embracing the trend rather than fighting it.